Blockchain.
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 Decentralized finance, or DeFi, is a new approach to financial services that aims to transform how transactions are conducted and who can access them. DeFi eliminates traditional financial middlemen like banks, creating a direct financial network open to anyone with internet access. This chapter covers the main components, platforms, and potential of DeFi, along with its unique benefits and challenges, illustrating its goal of making financial services available worldwide without relying on traditional banking. DeFi operates on public blockchains and smart contracts, essential technologies that enable financial services to function without central control. Users in DeFi interact directly with one another or through automated systems, avoiding reliance on a central institution. Key elements of DeFi include stablecoins, decentralized exchanges, lending platforms, and markets for synthetic assets. Each performs similar functions to traditional finance, but without a middleman. While DeFi has great promise, it also faces challenges like security risks and unclear regulations that can impact user trust and the system's effectiveness. Still, DeFi has drawn significant interest for its ability to speed up transactions, lower costs, and provide banking tools to underserved populations. DeFi marks a significant shift from centralized financial systems that define traditional finance, or TradFi. Traditional finance relies on centralized institutions like banks and stock exchanges that act as intermediaries, ensuring transaction protection, compliance with regulations, and public trust. However, this centralization can slow transaction times, raise costs, and limit access based on location or economic status. For instance, each financial action often incurs fees due to intermediaries. Additionally, traditional finance's regulatory structures can sometimes hinder innovation and access. In contrast, DeFi introduces a fully decentralized model built on blockchain technology, which ensures transparency, traceability, and security. Smart contracts are self-executing codes that operate under predefined rules, eliminating the need for human involvement. These contracts facilitate transactions automatically, making DeFi faster and more affordable by removing intermediaries. This structure enables DeFi to reach a global audience without the limitations of traditional finance. Anyone with an internet connection can participate, regardless of credit history or location. In practice, DeFi transactions can occur in seconds or minutes, compared to the days traditional banking can take. One of the most attractive differences is DeFi's transparency. While traditional finance can obscure many processes and transactions, DeFi records transactions on the blockchain, allowing anyone to see where money is going and how the system operates. This transparency fosters trust and accountability that can be challenging to replicate in traditional finance. However, the innovative nature of DeFi also presents challenges. While it focuses on accessibility and speed, it lacks the regulatory oversight seen in traditional finance, raising concerns regarding consumer protection and fraud. Several important platforms and protocols anchor the DeFi landscape, each providing unique functions. Ethereum is at the core of DeFi, supporting most DeFi applications through its smart contract capabilities. Developers can create decentralized applications, dApps, for various financial activities like borrowing, lending, and trading without banks. Ongoing upgrades to Ethereum aim to improve scalability and reduce transaction costs. MakerDAO is a notable DeFi protocol that demonstrates the potential of decentralized stablecoins, such as DI, pegged to the US dollar. DI maintains its stability through collateralized debt positions and decentralized governance, making it suitable for everyday transactions and investments. Another important protocol is Compound, which allows users to borrow assets against collateral and earn interest without involving traditional banks. It adjusts interest rates based on supply and demand, helping maintain liquidity in the system. Uniswap transforms trading in DeFi through its decentralized exchange, allowing peer-to-peer transactions of cryptocurrency tokens. This removes the need for a central authority, giving users full control over their funds. Uniswap's liquidity pool model allows anyone to contribute assets and earn fees, making DeFi more accessible and encouraging broader market participation. Aave expands decentralized lending by offering features like uncollateralized loans and flash loans, pushing the limits of lending in a decentralized environment. Finally, synthetics allows users to create synthetic assets that mimic real-world assets, introducing new asset classes to DeFi that would usually require traditional brokerage services. These platforms highlight DeFi's potential to transform various financial services by providing open, accessible, and innovative solutions that challenge traditional finance. One of DeFi's most exciting features is its accessibility. Traditional financial systems often exclude individuals lacking substantial economic resources or easy access to banks. In contrast, DeFi eliminates these barriers, allowing anyone with internet access to use banking services. This is crucial for areas where traditional banking is limited, as DeFi can help people unlock new economic opportunities. DeFi ensures that financial services are available to everyone, regardless of background or location. For example, DeFi lending platforms use algorithms that analyze real-time data instead of traditional credit histories, allowing individuals typically excluded by conventional lending standards to access loans and participate in financial markets without discrimination. Transparency is another vital advantage of DeFi. While traditional finance can obscure fund management, DeFi records all transactions publicly on the blockchain. This openness fosters accountability and reassures users about the security and integrity of DeFi platforms. Users can see how their money is being used and how the system operates, helping reduce fraud and increase trust in DeFi services. Together, accessibility, inclusivity, and transparency encourage healthy competition in the financial industry, motivating traditional institutions to adapt and innovate in response to DeFi. Despite its benefits, DeFi faces several challenges and risks that could hinder its growth. A significant issue is security. DeFi platforms rely on complex technology, and smart contracts that automate transactions can be vulnerable to errors or attacks, leading to substantial losses. High-profile hacks underline the importance of improving security to build user confidence. Regulatory uncertainty is another challenge. The decentralized nature of DeFi complicates applying existing financial regulations, creating a gray area for legal accountability and consumer protection. This lack of regulation can leave users vulnerable to fraud or issues with platform failures. As governments become more aware of DeFi, the regulatory response remains unclear. DeFi must carefully navigate these changing legal landscapes, as new regulations could affect its innovative potential. The complexity of DeFi can also pose challenges for users unfamiliar with blockchain and cryptocurrencies. This learning curve can create barriers to entry and increase the risk of user mistakes, such as sending funds to the wrong address or losing private keys. Market volatility can add to these risks, as rapid price changes can lead to instability on DeFi platforms, potentially increasing losses. Looking ahead, DeFi appears set for further growth and acceptance. Developing user-friendly interfaces and education can help more people access DeFi beyond those already involved with cryptocurrency. Integrating DeFi with traditional financial systems could also offer new options for users, allowing them to enjoy the benefits of both worlds. For traditional institutions, this integration could enhance security and efficiency through blockchain technology. Regulatory changes will be essential for DeFi's future, as regulators strive to create rules that protect consumers while encouraging innovation. DeFi's development will also depend on technological advancements in scalability and cross-chain interactions, which are vital for handling larger transaction volumes. The future of DeFi holds great potential and challenges, with opportunities to democratize financial services and enhance global access. As DeFi continues to evolve, its success will depend on overcoming challenges related to security, regulation, and education, ensuring that its promise of financial empowerment remains accessible, reliable, and safe for all users.